Good day. This is Peter Kniff from Castlestone Management with comments on the U.S. markets for the week of 12/7. U.S. equities did little last week, but you would hardly guess it by the action in the stock market. Markets slid early in the week after President Trump suggested a trade deal with China could wait until after next year's election. Then rallied on positive economic news capped by a strong payrolls report Friday. Conclusion? Very little happened. Volatility returned to the market after a holiday-shortened week. For the week, the Dow Jones dipped 0.13% to 28,014.49. The S&P 500 gained 0.16% to 3,145.91. The Nasdaq Composite lost 0.1% to 8,656.53. U.S. Treasury bond yields rose over the week as investors continue to rotate into riskier assets. The U.S. economy's addition of 266,000 jobs released Friday only add to investors' enthusiasm for risk. The yield on the 10-year Treasury note rose 4.7 basis points to 1.842%, its largest weekly rise since November 8th, while the 2-year note yield rose 3.7 basis points to 1.619%, its biggest rise in 3 weeks. The 30-year Treasury bond yield rose 3.8 basis points to 2.284%, snapping a 3-week drift lower. The U.S. dollar climbed on the labor report and finished at the upper end of its band for the week. Gold, it was a shift to riskier assets, hit the metals as well. Gold dropped 0.5% to 1,465.10 an ounce on the week. Silver fell 3%. Oil prices climbed over the week, with prices posting their highest settlements since September after OPEC and its allies agreed to officially cut production by 500,000 barrels a day on top of the current reduction agreement that will begin in January. Thanks for your time today. Thank you for doing business with Castlestone, and we'll talk to you soon.